The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another special edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Here to answer your questions and conundrums every time at this day.
The following takes place between 2 p.m. and 3 p.m.
So what do we have? The S&P's up 4, the Dow's down 27, NASDAQ's up 32. And it's about what you would expect. I already have some questions in here for the show. The first one was, I see you posted earlier this morning around 10 a.m. You asked, what are the odds of the S&P closing within plus or minus 10 points today? You never answered it. I suspect you knew or had an answer, and the answer is yes. Probably about an 80% or better probability that going into these big 3-day weekends where you have Monday off, that you're going to be within plus or minus 10 points on the S&P cash. The volume will start falling off somewhere around 10:30 or 11. But that's it. Again, volume's falling off. Not as bad as it had been in the past. We were doing about 6.5 billion shares yesterday at this time. We now are doing about 5.7. So volume a little bit better than I thought, but of course it's going to be kind of a light volume day. Everybody started shorting the daylights out of the market, thinking, I think, that a wheel was going to fall off a wagon once again today. A lot of shorts in NVIDIA. Earnings were basically in line. It slowly, I haven't looked at it lately, it slowly was creeping up throughout the day. NVDA on earnings. What do we have now here? It's up 10 points. So the wasn't expecting a lot of movement in here. You needed about a 5% move to start making any money on options. And you're not really going to get them. You're not really going to get anywhere close to that, about a 3% move at the moment. But not uncommon. But I think probably NVIDIA could have gone down a little bit. But everybody just is absolutely sure that the wheel's going to fall off the wagon. So they short, market goes up a little bit, and they cover. And that is the problem. You have to wait until the shorts give up for the market to fail. We basically had those conditions when everything started. That's why the market fell apart so hard, at least in my opinion, at the end of February, that no one could short because they kept ramming it up, and there were very few shorts when the bad news hit. Other things going on in the market, crude had been up fairly strongly for a while. Not a big surprise that we've got a little bit of a pullback here today at $33.03. That's at least okay. Yeah, that's about it. There's not a whole lot to say about that. Let's go back here and look at the bigger thing. So anyway, up 4 points on the S&P, Dow's down 27, NASDAQ's up 37. You're not going to really say a lot on it. Russell's down less than 0.2%. Crude's kind of the big mover at down about 3 cents, 3%, not 3 cents. And that would be about it. So we've got today, which is going to be a low volume day, in which probably we're going to close flat. my guess is there'll be a bunch of people that want to jump on this market at the close. They'll get it back to flat on the S&P cash. And that will be it. And, of course, we'll have a lot of shorts to squeeze out next week. When these folks quit shorting, I suspect the market will be ready to go down. Now, maybe it just pulls back a little bit. But if you're looking for any kind of thing that you make real money on, not just pocket change, it's going to probably take the shorts giving up. We've seen this, or at least I've seen this many times in the past, and I think we could. I think in a handful of days next week, go into fund buying, you could finally get maybe a small move higher in the market. But a lot of the stocks that are massively, and I mean overly shorted, like Apple, will probably have some spikes. They'll run out all the shorts at that point, and at that time, you'll think, well, there's no reason that I would short up here. And that's exactly the time, if you're going to take a chance at shorting, is when everybody gives up the ghost, when everybody runs for cover. That is the best time to act. When there's the old saying, buy when there's blood in the streets, same thing. You want to short when there's not so much just euphoria, but a ludicrous amount of euphoria based on running shorts out of the marketplace. And that happens quite a bit. And generally, if you'll just sit back and have a lot of patience, you'll get your opportunity. Now, maybe we go higher. I just don't think we go much higher. The risk reward pretty horrible, all except short squeezes, in my opinion, right now. And again, next week, got a couple of days, shortened week. Then you get into fund buying. Will that first week in maybe June really set up a time where the market could pull back? I don't think we're talking about life-altering swings. I'm kind of looking at around a 200-point trading range, maybe down to 2,800 on the S&P cash. Maybe we go over a little over 3,000 Tuesday or Wednesday next week and set up some kind of high. Hard to say, but I'm not expecting massive swings next week other than huge spikes in stocks that people are paying no attention to how short they are. They're going to get not only squeezed, they're going to get probably pasteurized. I'm trying to remember all the things I see on the orange juice cardboard container, but can't remember. It's kind of interesting that you still get it in the cardboard container for orange juice where milk comes in plastic. Always wondered about that. Anyway, you can give me a call. This is an excellent day to do it. The reason why? Well, it's kind of quiet. So if you've had a lingering question or conundrum, a dangling participle of thinking, this is a good time to call in today. 877-927-6648 to infinity and beyond.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Then it's all just a little bit of history repeating.
On this day in 1445, that's a date in history, by the way, in the opening battle of England's War of the Roses, the Yorkists defeat King Henry VI Lancastrian forces at St. Albans, 20 miles northwest of London. Many Lancastrian nobles perished, including Edmund Beaufort, the Duke of Somerset, and the king was forced to submit to the rule of his cousin, Richard of York. The dynasty struggle between the House of York, whose badge was a white rose, and the House of Lancaster, later associated with a red rose, would stretch on for 30 years. And, of course, the inspiration for Game of Thrones. But, of course, no dragons, no magical stuff. That was all added with lots of special effects. But basically everything in the war, in Game of Thrones, is somewhat loosely situated around the warring factions back then in 1445. And of course, 30 years of war. Ugh. Man, what a buzzkill. I bet everybody was tired of reading about that. We're tired of about 2 months of a pesky virus, and we're kind of sick of it. So you can only think about that. Special bonus question for a Friday going into a 3-day weekend. What is the difference between dragons in England and dragons in China? Yeah, think about that. Huh? Class? Class, anybody? Well, the dragons in China don't fly. No wings, but kind of the same looking things across the globe in England at the same time with wings. You always wonder where all these things. Yep, that's also true. All cities in South Carolina. What can you say? Not a lot of people coming up with new ideas in the new country. As we said, not much is going on. I'm going to be surprised if, no, probably not too surprised, but a little surprised if they actually make the S&P close at totally flat today. But it would be, stranger things have happened. Again, I think maybe Tuesday, Wednesday, we get some kind of bounce. We're going to test 3,000. I think we're just too close to it to not go up there and at least tag it, say you're it, before everybody, I think, piles on. But with all these shorts in there, it could be over in 30 minutes. You could just bounce up there and I'll give it up. But we need the shorts to capitulate, just like we need longs at the lows to capitulate before the markets tend to turn very well. Okay, we got other things going on. The market already in progress. And the phone lines. Okay, we got them. We've got phone lines, I'm told, by the engineer. Looking at a lot of the stocks that either had earnings or news, this is what I'm kind of talking about, and that is spikes in the market. You want a spike that goes through, gives it all up, and comes back down to kind of give you an indication that you've made a high. Today's probably not the end-all, be-all with these because, of course, we're going to have light volume probably anyway today. Tuesday and Wednesday, we come back into fund buying. You could still probably get a little bit more out of these, but you were looking for probably south of 3 million shares on Agilent Technologies, AG, C's, and T's, all the letters of DNA. It did spike it, but you had the volume, 3.5 million shares compared to 3 million shares back on March 3rd. So you're probably going to get today's high retested. But a lot of people weren't willing to hang out at that high today. Alibaba and his 40 thieves, wasn't it? 100 thieves? 30 thieves? I want to say 40 thieves, right? Alibaba and the 40 thieves. Man, I think I read that when I was 10. So 50 years ago today, I read Alibaba and the 40 thieves. Down today, a lot of volume. Of course, can we just say it? Dictators acting badly in China, kind of giving a idea of what is to come. And I think that's everything. You got probably a pretty good indication with the volume that you're going to go retest the May 4th low. That's 189.53. It's not that far away, but certainly that gap of about 190, 195, probably going to get tested sooner rather than later. Deckards, actually a nice pop on this one with some decent volume. Of course, the tennis shoe maker, right, is getting back up there. It did get into the early days of March. That had like 300 some odd thousand shares. You got double that today with about 800,000 shares so far. Didn't hold the highs, but didn't give it all back either. So kind of a mixed bag there. Foot Locker, another one of these shoe companies. Of course, it's so embedded in malls. It's kind of the Victoria's Secret of footwear, right? Only in the malls. Down on huge volume. It's still unclear why everybody's going to go to the Foot Locker to buy those, but that's just me, I guess. Hewlett-Packard Enterprise, the remnants of a one prosperous, and huge megalith. Not so happy today. Down with significant volume. There's a gap right around $8. My guess is that this is the first of several gaps that will bring you back to that $8 level. Again, if you don't have a huge presence in web services, it is very tough in these big conglomerates to make a lot of dough. Intuit got to it, did kind of go back down to 280.59 today, but has held this small gap from the 18th of May that had 1.2 million shares. You got about the same volume today, so kind of indecisive on Intuit. We talked about NVIDIA, still looking good. I don't see any reason to think that this thing is going to get hurt any worse than the rest of them. In fact, we'll probably talk with Tom O'Brien a little bit about it at 3:30. Actually, it looks fairly good. Okay, Palo Alto Networks up a little bit, not holding a whole lot, but filling the gap. Those gaps go back to the 25th and 24th of February. You had about 10 million shares on the way down. Things up here at about 3.3 million shares. So I'm just figuring you got about 95% of the bounce in, maybe 98% of the bounce in of a lot of these things that came off the lows. And you know what? The volume's there. Plus, PLUS, E+, did open higher, pretty much giving it all back. I'd watch this one closely in the next couple of days, next week. Looks like a short squeeze.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Going on here. And we're going to go to Jeff in Jersey. How you doing today, Jeff?
Hi, David. I'm doing great. How about you?
Fantastic.
Well, you seem to be asking for any esoteric back shelf type of question, and I got a doozy for you.
Okay.
So I remember back in college, we learned about Fourier analysis, which was like basically adding up waves of different frequency and amplitude and phase in order to, like using the superposition principle to end up with a target wave, or whatever the combined wave looks like. So you could also start with the wave, and then, or like you start with the wave, and then represent that wave with like a summation of other waves of different frequencies. Like I remember particularly like if there's a square wave at the corners, that was a high frequency, and so on. So my question is, I imagine that tons of research has been done, maybe public, maybe secret, where like big trading firms or quants tried to apply Fourier analysis to take the market, the waves in the market, and try to break it down into some simpler, more fundamental waves so that you can predict the future. And I was just wondering if you were familiar with, well, I guess first what I'm talking about, but second, if you're aware of any research that's been done and, whether it's fruitful or not. Like maybe it's been proven it's just too, random, too crazy to use Fourier analysis. Or maybe it has been done and people know what it is, but it's so proprietary, nobody's talking about it.
Let's rephrase your question. And I'm showing on Tiger TV now a excellent channel on math called 3 Blue 1 Brown on YouTube. They have some excellent, if you email me, I'll send you the link. But they have some excellent tutorials on that channel of visualizing the Fourier transform. And the idea is that if you took a can of paint and you put in different color pigments, could you pull those pigments back out? It's kind of basically the equivalent of that, right?
Right.
But there is kind of a difference in what you have to figure out from Fourier analysis, and that is it will tell you something that a lot of people in the stock market don't want to hear. That is frequency, not amplitude. Fourier frequency would tell you whether or not something happens every month, every 2 weeks, on a high tide, anything that you can look at that would happen repeatedly, right? It's not going to tell you about the amplitude. You can use Fourier analysis to remove, let's say, noise in recordings. Anything where it's frequency bound, but not amplitude, so much amplitude bound. Or in the case of the stock market, if every Monday the stock went up $1, you'd be able to actually find that with Fourier analysis, right? So a lot of people believe in cycle or cyclic work in the stock market. It would be incredibly easy to prove that it is and does work using Fourier analysis. On the other side, it's very easy to show with Fourier analysis that there's nothing to it. Most people that believe in cyclical stuff don't actually use any rigorous math or techniques like fast Fourier or transforms to come back and look at it. You can probably, there are some interesting things that you can prove in the stock market with it. There are a lot more things you can prove false, which is just as important, right? You want to be able to falsify any of your actual beliefs. That's part of, you know what pauperism is?
I'm sorry, what's the word?
Popper. He was a guy. He basically said that that any good theory, you've got to be able to say how you would prove that theory wrong, right? And if you can't prove the theory wrong, then it's more of a belief than any kind of science. So if you're going to say that this works some way, you need to say that it also won't work with some kind of test. And that is one of the reasons why a lot of people don't use a lot of rigor in the stock market, because there is, for everybody I've ever seen, all the papers from academia, the cyclic work is probably the hardest to actually show any profits over time. But you can find things that are very interesting, but maybe they don't work. Now, there's a second part of this that you would have to use with fast Fourier transforms. And this is a thing called dynamic time warping, right? Let's say that that there's something that happens somewhere around the middle of the month. But maybe it's the 15th, maybe it's the 14th, maybe it's the 16th because it was a weekend, right? So you kind of know vaguely that it's the middle of the month and the stock market pops. Maybe there's a reason for it. Well, dynamic time warping allows you to take a signal and, like an accordion, where you can kind of squeeze it together at the top and expand it at the bottom, or expand it at the top and squeeze it in the bottom. That's called dynamic time warping, right? So you can kind of shift the signal around and see whether or not it's kind of in that area. You'd use that with fast Fourier transforms, and that's generally where most of the work on Wall Street signals around for finding things that are cyclical, right? When they say that they're cyclical in the market, they kind of mean that eventually this part of the market keeps moving, not that it actually is cyclical, that it happens in a period of time. They just mean that occasionally it runs. But again, there's no easy way to go back and figure out exactly what happens. So that's it. But here's another way that you would want to look at this. Let's say that you, like me, or maybe me like you, thinks that fund buying is something that moves the market. We know it's the last 2 days and 3 days of the month, right? So you could put that in to a algorithm, and there's a thing called a one-hot encoding. That means that, let's say that you, like today, I'm basically saying the market's going to be flat. You're going into a 3-day weekend. One-hot encoding is like checking a box saying, okay, this is a day before the 3-day weekend. Maybe you got a box for the day after the 3-day weekend. But it's basically a one, and that symbolizes something in the data. You could also have numbers like 4321 going up to Christmas Day. We'll talk about this when we come back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, Jeff, does that kind of answer your question?
Well, you introduced a lot of interesting topics that I would love to go research.
Okay, why don't you do this?
Certainly very impressive wealth of technical knowledge, but I'm not sure.
Why don't you do this? Why don't you
what I was looking to do is to see if I can take the complicated price wave and separate it into simpler waves that I can then project out the simpler waves because they're simple sine waves, say, and then I can see where there's going to be some kind of coincidence in the future and say, oh, well, there should be some kind of a spike in the market because these waves are coming together and going to, add up to something.
Yeah, why don't you do this? If you email me, I'll send you some links to stuff that you need to look at. It's a good idea, but you probably want to look at a few other ways that I'll point you to. Okay?
Okay. Yeah, I'm sure this has been looked into.
It has. And,
so that's why I was calling.
I can tell you all the ways that it won't work. Email me at path@tfnn.com. PATH.
Okay, fantastic.
TFNN.com. Okay? Thank you much.
Yeah, thank you so much. I appreciate your time on it.
Let's see. Gary in New Buffalo, Michigan. How you doing, Gary?
Hey, good, David. And by the way, did I catch something? Were you saying that 50 years ago it was your birthday? I mean, 50 years ago you said you were 10 years old reading and you said it to the day. I was curious, just an odd thing.
I think I was joking.
Oh, joking. Okay, got you. Okay. I was calling on, basically I'm looking at subscribing. I'm a subscriber to a couple others, and I enjoy everybody there. And you're very, very, like the gentleman just said, very sharp. And on the technology end, I'm curious, you have two different services, and the one has the technology letter that gets the webinar archive, but that's the cheaper one, the more expensive one. Can you give a little overview for me? And
yeah, the one's supposed to be more, the Tech Insider is more on trends and technology and stuff that you may want to put in your IRA, that kind of stuff. Unfortunately, I'm hoping to be able to hold stocks for a while, but this market's been way too volatile for that. But I assume that you can get in and out of a trade in a day in the Tech Insider. I assume that you can get in and out of a trade within an hour in the path of least resistance. Path of least resistance comes out 5 times a week, plus updates. Tech Insider on Fridays, and when necessary, to add positions or sell positions. But kind of more of a swing trader for the daily newsletter. and more of a long-distance fundamental story for the Tech Insider.
And as far as, because I'm more of a long story guy, I'm a big precious metals guy, and so that's typically a long view. Would there still be interaction as far as on a shorter term, or is there a lot more of the day-to-day versus the tech, or does the tech still have some volume as far as selection?
It's basically, I'm trying to hope it to hold at least maybe 60 days, and the tech stocks for the Tech Insider, maybe longer. It's much tougher these days to say I want to hold for a year, but we try to hold them as long as possible. But most of them have some kind of story that really hasn't hit the front page of the newspaper yet, or ones that people have discounted out. So that there's a fairly good idea that I've looked into, and I can make an argument for kind of long-term growth in it.
Great. That's more me. I'm not an in and out on the day type stuff. So cool. Okay. Thank you so much. Have a safe and be well weekend. Okay.
Thanks. Okay. Then we got Amy in Las Vegas. How are we doing, Amy?
Hey, David.
Yep.
Can you take a look at CB?
Mm-hmm. Chubb. The big.
Yeah. Is it a good to go long on this stock?
Well, I probably wouldn't be buying it here, but I don't chase stocks on the way up. What's your idea of why you want to buy Chubb?
Well, yesterday and today it's been going up, and I was just curious. And also, what is the percentage of shorts on this stock?
Okay, well, that's a good question to go take a look at. You've got some pretty big swings in Chubb. Are you watching on Tiger TV?
Yes, I am.
Or in the den?
Yes.
You had some decent amounts of shorts in that yesterday, but it's not generally on the list of most hated stocks. NVIDIA is. I think, what do you have, 35% shorts in NVIDIA yesterday? On this, hang on, where is that? I know it's here somewhere. Okay, let me bring that up. Let's take a look at what CB's been. On the bi-monthly reports, you've got about 1 day to cover on Chubb. That means that all the shorts could get out on the average volume of a single day. So not a lot of shorts to drive this stock up or have a squeeze. On a daily basis, you had 12% yesterday. To give you an idea, on NVIDIA, that was 26% yesterday, 30% the day before in NVIDIA. So when I'm talking about short squeezes, you're looking for something in the high range. Now, every day in my newsletter, I actually put a chart in there of what I call the most hated stocks. I'll zoom into it here on Tiger TV so you can look. But the most hated stock yesterday was Microchip Technology. That had 38% shorts. United Continental had 38%. Royal Caribbean 36%.
Wow.
Advanced Micro Devices, which I find kind of be ludicrous to be on this list. I can understand every one of the ships in Royal Caribbean sinking tomorrow. Hard for me to see how everything goes to hell in a handbasket for Advanced Micro Devices. Same thing with Facebook, 31% yesterday. These people, Apple, 29%. These people are all betting on the end of the world on those. Salesforce, 28%.
I can't believe Apple percentage is so high.
Especially with $280 billion to beat you over the head with if you want to go short stock. So
is that part of the reason why you keep going up, because the shorts have to cover on Apple?
Yes. It's kind of like a ratchet. Yeah, they short, they cover tomorrow, which pushes up a little higher. Even more people short, it pushes it up tomorrow. And eventually they give up. When they give up, that's generally the highs in those stocks. But of course, there'll probably still be a lot of shorts in those stocks, and it takes a while for it to go down. Just the opposite on Tesla these days, where it's got maybe a fourth of the shorts in it that it had a year ago.
Great. Thank you so much.
You bet. We'll be back to finish this up, and remember, we'll be with Tom O'Brien at 3:30 talking technology.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I have a good question from Eddie. Understand the short rationale for keeping the markets up. Any idea when the musical chairs stop? How do we know when the shorts have given up? And that is the put-call ratio on the VIX and the equities. The short numbers from FINRA will tell you how many people are piling on in the market. And one of the best things to see is that intraday failed spike, XJ. Is that right? Yeah. You get these. One of the reasons why we bought the dust and traded it for yesterday was this big, what I anticipated was a big spike. Then there wasn't very much in the way of volume in that early part of the day. But you're going to get something that looks like that candle on the GDXJ 2 days ago, up to $50.37. It's going to give it all up, You're not going to have the volume. If you have a good handle on things, you're going to know the volumes already from a previous high. The February 24th high on GDXJ had 28 million shares. You got into it with 7 million shares. It reversed that day. You're going to see a bunch of different signals. There are going to be candles, volume. You're going to be able to watch the stock during the day or the market during the day. You're going to have that sharp change. But what we want to see is a move higher in the market, lighter volume, bust through some kind of thing, a good candle that says we've got a reversal, and, of course, the numbers that we'll see later that night to confirm it will be that people did not have the ability to pull the trigger one last time, and that is when you actually want to pull the trigger. So, what can you say? Those spikes will be big. And, of course, we'll probably have a couple of stocks like Wayfair and Tesla have big $50 moves and give them all up in a day. Generally, that's the way those tops come in. They let you know, and they're pretty vibrant. We just haven't had that yet. See you at 3:30 with Tom O'Brien. In the meantime, sell when you can, not when you have to. And we will see you here, not Monday, because we're closed, Tuesday, back here again, back in the saddle.